Hey guys, it's Kevin Davis from Detailer's Helper, and today we're going to be talking about a very exciting topic, taxes and business structure. I know you are so excited about that, but hey, it's important information, so stick with me. I'll make it quick. If you're already established, I think there's some good information in here. If you're just starting out, there's definitely some good information, at least to steer you in the right direction. So, typical disclaimer here, I am not a tax attorney, I am not an accountant, and I do not do this for a living. So, here's my little plug. If you're not currently using a CPA or somebody to do your taxes for you, unless you're making very little money with your business, it would be warranted, I think, to at least check out some prices, check out some different things in your local area to see whether or not you can find somebody to do that for you. I spend probably $800 a year, $800 a year having someone do my corporate and personal taxes, and it saves me thousands. I know for a fact that it saves me thousands. So there's my little plug for your professional accountants. If you happen to be a professional accountant and you're watching this, feel free to send me a thank you note, and gift cards are accepted. So, all right, so let's talk about the three basic types of business structures that we're going to worry about. Obviously, there's a ton of different ones, different levels of corporation, that kind of thing, but we're going to talk basically about sole proprietor, LLC, which is limited liability company, and SCorp, which the LLC and SCorp sort of blend into each other depending on your tax situation. Okay, so sole proprietorship is what most people starting out are going to choose. It's basically just you doing business as a particular business name. And so what you might do there is go in to your Secretary of State. You're going to just make sure you have your business license, make sure you register with the state so that have your business name, no one can take it, and you're sort of all legal. And each municipality, county, state may have different rules, so make sure you check and know which one you're doing. In our state, I basically just have to go and spend $20 to $25 a year in order to keep my registration with the Secretary of State, so that's sort of easy. Sole proprietor basically means that everything just goes through you, both financially and with your liability with your business. So that's where it can be a little bit tricky, because as far as the law goes, they make no distinction between your company and yourself. So if you're sort of a small-time, part-time guy or gal, and you're just doing your thing on the weekends or whatever, then this might work best for you because it's just easy. You're just going to use your social security number for most of your forms. You spend a little bit of money to register with the state and your local city, that kind of thing, and you're done with it. When you file your taxes at the end of the year, you just treat that income as 1099 income, I think. You'd have to, again, check with your CPA on that. But basically, it just gets treated as normal income, so it's not that big a deal. So the disadvantage of a sole proprietorship is that same thing, where you're treated the same as the company, so you have no distinction between the two. So from a liability standpoint, if someone for some reason decides to sue you, they are suing you personally, not the company. So you have no distinction between those two things. Whereas an LLC, a limited liability company sort of acts as a buffer between you, your personal assets, your personal responsibility, and the company's assets and the company responsibility. Someone could theoretically sue the company, which you are a representative of, and it gets really complicated legally, but it does give you some protection liability-wise between the business and you your personal assets, your family assets, that kind of thing. So that's typically why someone would go with an LLC instead of a sole proprietorship, and I actually recommend that. From a tax standpoint, it's essentially a wash, because all of your income as an LLC, there's a specific name for it, but basically all of that income just gets treated as personal income anyway. So it gives you a legal definition that can give you some liability protection, but from a tax standpoint, it's basically the same thing. Okay, so the third option is an SCorp. So basically an SCorp gives you the same liability protection that you get for an LLC, but then it takes it a step farther in that you have some tax benefits for being an SCorp. So it's a form of a corporation. So instead of the corporation, instead of like an LLC where you and the LLC are essentially the same tax-wise, from an SCorp standpoint, it's a little bit different. So for example, I run Beartooth Web Development, Inc. So that's my main company that I've used for about 18 years. I run pretty much all of my companies, all of my income under that umbrella from the IRS standpoint. They really don't care because it's all on the same employee identification number, which I'll talk about in a second. and as long as they get their money, I report all the income. That's all they care about. So under that umbrella of my corporate umbrella, I'm basically reporting corporate income. So all those funds are treated under corporate tax law, and then I get taxed corporately for that. And then, but the difference between that and an LLC is that under the LLC, I would get taxed and pay self-employment tax on all of that income. So when you do an SCorp, the difference is I actually act as the CEO, chairman, whatever you want to call it, of Beartooth Web Development, Inc. And I take a salary based on that role in the corporation. Okay, so now here's where it gets a little confusing, but beneficial. So in my area, web developers, that kind of thing, earn about $25,000 to $30,000 a year. So I can actually take a salary based on that market, based on that job, and just pay personal income tax on that salary. So rather than paying personal income tax on $100,000, I can take personal income tax on $24,000 to $30,000, pay Social Security on that. I don't have to pay self-employment tax on it because I'm not an LLC, I'm not a sole proprietor, so that saves me 15.3%, something like that, just on that differential. And then, so that, as you can see, that would reduce your tax liability in general. Started doing some research and looking it up, and depending on your tax situation, depending on where you live, there could be city requirements for taxes, there could be state taxes that are both corporate and personal income tax that would make a big difference. So make sure you talk to your accountant and check with them to make sure all of that makes sense. So in my case, I live in Montana. We have pretty low corporate taxes, so and actually pretty low personal income tax, not too bad. Most of our taxes come in from property taxes, but so it's beneficial to me for this filing structure based on the business, based on the income that I make. So for you, it might be different. So you want to check with someone who knows what they're talking about so that you can make the best decision. Either way, I think for most people, unless you're just sort of a weekend warrior doing this on the side for not a lot of money each year, it probably makes sense to at least choose LLC or SCorp to go into your business structure to make sure you have some protection between your personal assets and your business assets. So let's talk about one final thing, which is the EIN number. You may have seen this thrown around. If you're a sole proprietor, you probably don't have one. You may not have one yet, but if you start talking to people about distributing their products, that kind of thing, they may actually require either an EIN number, employee identification number, or they may require a copy of your business license, which is a different thing because one's federal, one's state, one's city. So basically, a federal EIN number is just like a business social security number, and it's free. You can get it by the IRS on the IRS website. I'll put the link there. And in my opinion, it's probably best just to go ahead and have one, because then you're doing everything you can to separate your personal social security number from your business stuff, and then you can use your EIN for lots of different places. And in some cases, you can even get wholesaler pricing by using an EIN. You don't have to give a copy of your business license or anything like that. So that is sort of the EIN thing. So let me just summarize real quick. You've got three different types. You've got sole proprietor, which basically means that everything is it's all about you. All the money comes into you, all the income is reported as your personal income, and then all the liability is on your shoulders. Just personally, there's no distinction between the business side and the personal side. You got LLC, which is limited liability company. From a tax standpoint, everything still rolls right through you as personal income, but you have some liability protection that separates your personal assets from your more business assets. And then you have the SCorp, which is actually treating it as a completely separate entity of which you are a member. And then there's some tax benefits there. You have the same liability benefits, and that works pretty well for me. And it might work for you, but again, I'm going to reiterate that probably for this stuff, it gets so complicated that paying $500 or $600 a year to somebody might make perfect sense, and it might save you 15 grand a year on taxes. So there's some other benefits. There's some other intrinsic things that go along with these different structures that we won't get into. But I wanted to give you a very sort of short definition of each one of these and sort of give you my experience, help you to be able to make the right decision. So hope that helps you guys. I'm Kevin Davis from Detailer's Helper, doing what I do so you can do what you do better.